Hello and welcome, as it is the 20th day of February 2018. My name is Derek, and like always, everything is within your own risk, own reward. Let's take a quick look at the silver chart, and it's not really moving much. Oh, it's going to have moves above and below the 18 average, but the length of its volatility, 15 2/3, up to 17 3/4. That's a little over 10% on the December rally. And throughout the year, it's been pretty much going sideways. However, when I take a look at my silver and the physical commodity, it's really, really tangible. There are coins in several locations, different safes, and well, my favorite coin would be this one. It is a 1 kilo Year of the Dog. It's got a picture of a shepherd and a little one right beside it. Well, this coin, I have this in a display cases. I put them in several different spots because they're beautiful to look at, beautiful to touch. And the 1 kilo size coins, they're huge. I really, really love them. I want to get as many of these in other sizes, the 10 ounce, 5 ounce, 1 ounce, maybe even the whatever other sizes they have, because I really, really do like this particular coin. Again, a very tangible item. Another tangible item would be Bitcoin. And it is just as tangible as my physical silver. It's also in that of a safe. For me, all I need to do is plug in my Trezor wallet, and then instantly a screen will pop up with 9 stars, and I have to put my PIN code on. Of course, the PIN code will be displayed as far as what number is each on the actual hardware device, but I feel very safe as I do with my physical silver, as I do with my Bitcoin, Litecoin, Dash, and ZEC that's in my Trezor wallet. Now, as far as exchanges are concerned, I've heard a lot of people talking about how you can't trust them. I think the best way of putting it is you trust them less. I look at it in 2 different levels. One, is there ever going to be a time where the bad thing you expect is going to happen? Get any type of bad news on the exchange funds that is not good for you, detrimental. Something like Mt. Gox, where maybe either they scam you or they have good intentions, but they just don't survive and you become a beneficiary of their poor financial success. It's the exact same thing in theory as holding fiat currencies in other types of bank accounts and other online accounts. Whether you're on like any type of regular bank, Wells Fargo, Scotia Bank, or your PokerStars account. Somebody is holding your funds. PayPal, somebody is holding your funds. Of course, for the most part, when you have them there, you feel very secure that you are going to be able to do everything that you expect within the guidelines. So in cases of course, places like banks, you expect to make your withdrawals, your deposits, and use it online as the features allow you to. And within exchanges, you would be able to trade the market, buy and sell different types of coins, make deposits, and make withdrawals. You may have different type of withdrawal limits and such, but if you're aware of them. But you can even have situations where you're like, okay, maybe you got 2/5 of a Bitcoin you can withdraw, or $2,000 or $5,000. But next thing you know, you find out that the numbers shrink and they change the number. Those are things that are always going to happen. But when everything comes to how it plays, if it wasn't for the exchanges, then I would have nowhere near as many cryptocurrencies as I do in my hardware wallet. The amount of physical silver in my possession would be nowhere near as high, because the exchanges allow me to increase cryptocurrency totals, whereas having them on hardware wallets, they remained as such. Okay. Just a few things that I wanted to point out that I think are relatively important, because when you look at tangibility, that's the fact that you can touch them. So the fact that I can take my silver coins and rounds and bars, put them in my hands, and make any type of either A, transaction, which is all it's going to be, or B, melt it down and do all the fun scientific stuff, not even maybe, no. That's the tangibility to it. The tangibility to Bitcoin and Litecoin is I can take my hardware wallet with its private keys set up to such, and I can go on there and move them around as need be without permission. That's the key word, permission. Because all the banking systems is just that. They are letting you access their website. PayPal is letting you do such. That's what I like about it. All right. As far as some coins, like I've been stating, Bitcoin, Litecoin, they're both looking pretty good against the US dollar as Bitcoin. I talked about this in the 2.5 minute warning, this pattern. I fully expect there's a good chance that continued upside will come into place. I think though, however, if we don't reach the target soon, I wouldn't be surprised if it'll make sense on the shorter term time frame. So let's take a look at this 2 hour time frame. It's been consistent lower highs. I guess at any time when it makes its first lower high, you could have any type of decent move of retracement style, maybe even down to like, well, I got 9,500, of course. And that could still work out to the bullish degree. However, the favorite is making a move up to here. So mathematically, a move from 9,500 to 11,004, or a difference of a little under 2,000 points, is a little more than 20%. Right now, the move from 11.4 to 12.5 would be a difference of about 1,100 points. So we're looking at 10%. So it's well above this area. I think of this as like if I was a bookmaker at a sports book and I had a job where I had to make a line. And let's assume the price was back at the 50% retracement, around the 10.8, wherever that 50% retracement was. If I was given the job of what will occur next, price will cross 12,854 or cross 9,484, and I have to say which is favored, I would almost put decent juice odds that it would go to the higher level, meaning I would be confident enough to offer better than even odds, even money, within the proposition that it would pierce below this line than it would this. Now, of course, now, as it's much closer, you would be looking at like getting well better than 2-to-1 odds, 3-to-1 odds, that the price would reach here before it does there. Same thing for this one. We have the price at 237. What would be more likely to happen? A pierce above 300 or a pierce below the 18 average of lows, which is currently set in at 182. So it would have to go down about $55 to get to this point, and it would have to move up about 62 and change to get to the upside. So one might say, just mathematically speaking, especially with the 18 average rising each day, that it would be more likely that you'd come in and hit the 18 average. And if you don't know anything more than just those base numbers, then maybe you can calculate something like there's a 60 or 65% chance it's going to go down rather than go up. But given market psychology, given all the information that you are aware of, because this is like poker. It's a game of incomplete information, which is what I love about this game. You can get as much information you can, but you only have so much data available to you. The difference is you can count the different combinations. Poker can have a lot better. And you can run into situations where the mathematical odds are basically fact. An example of that, like I talk about, is the mathematics of, say, I bet whatever the bet is, if I give you 3-to-1 odds to make a call, then the odds are basically 25% for you, or mathematically at a small blind versus big blind, if I min raise the big blind from the small, I'm getting 2-to-1 odds on an even odds prop. And within markets, you don't even oftentimes know where you're going to be getting your profits from, because you know, saying like a sports bet, okay, I'm betting 100 to win 150 or something, or 100 to win 90. Here, you might put whatever amount on it and it's going to go wherever and you're going to cash to whatever it is. But there's a lot of mathematical numbers and a lot of different things. And the more information you have, the better it's going to work out. And if you can have really good information where you can be mathematically confident that there is a much higher chance that you're going to have a decent move to an upside given its equivalency to the downside, then mathematically you're going to want to be long. And opposite's true. If you see there's a much better chance of going down, you're going to be looking for selling opportunities and, if applicable, shorting opportunities. Within the 4-hour chart on the Litecoin, just going over regular technical analysis, to me this is beginner information, so I'll go over it. You're in a situation after you have a leg higher. You leave the 18 average band here, and it goes straight up to this point. The only red candle was in here, so there wasn't much for only very short-term correcting, rather. And markets can correct one and or of two ways. Either through price, where the price has decent down moves, or through time. And I do say the and or because you can have a combination of both. And in order to have a time correction, you always have to have at least a small price correction, like here and down towards here. So the resistance line becomes huge when you sustain a move of this level for a more significant period of time. So support and resistance, as drawn in this rectangle, was clear. And within the recent move, within the last 3 candles, there's about 5 or 6 that hung in with the 18 average. That's where the battlegrounds are being fought between the bulls and the bears. The bulls seem to have won this battle. Just like when the battleground was fought in here, the bulls really won that battle, because when they got out of it, they went for a decent, well, I'll call it a knockout punch, but there's been better knockout punches before. So it's now gotten that stage. It's made the statement. The statement is that it's done the correction via time, and that it's ready for another leg higher before it's in need of another correction. The volume. We have lower volume on the sideways correction and similar decent size volume to those previous periods. Again, I think it's something worth considering. Now let's analyze this further, even more short term, because then we can get a case for how the markets are playing this level of resistance. I'll place a horizontal ray roughly at that. That's where it is. So let's go 30 minutes. Okay. So now we've got the play where within this time frame, the 18 average battle was decided by the bulls. And then it has a price correction down to the 18 average of lows, down to the previous key resistance. Price correction over situation in the battleground, because you're spending a lot of time within the 18 average. Right now, within the 30-minute, it is had its previous period breaking below the 18 average of lows, something it didn't do for about 10 periods, and had a nice move as far as its distance from the 18 lows to the, again, key support level, test number 2 with a lower high preceding. And now it is just stabilizing. This is a 30-minute time frame. There is 7 minutes and 51 seconds left. That's important because I know that the vast majority of this time is completed. That's 44 of 60, so that's like 3/4 of its time. It's like one of those, okay, we've had a move and we're pretty much in a pause situation. To me, it's really neither bullish or bearish, although you still got signs that on the short term, if this breaks down, okay, maybe we'd go below this, which would mean that in this battle, the bears would win on the 30-minute, and then translating it back over to, say, well, we were in the 4-hour, I think, before. That would mean that it made its statement in its move already. If price action is to hold above, we can see resistance before was at about the 227 mark. And the 18 average will always cooperate in this spot. It would stay within the 18. So it would now be in a correctionary move for the new status statement of wanting to break out. The battle lines will be battled between the bears and the bulls. So in a situation like this, if, say, the price action comes in like this, the 18 average starts to rise barely and its price is in there. It would obviously stop rising, go back to the flattening mode if it stays within. And when you see moves like this, that basically tells you there was a battle, the bulls win. And if not, if you see this, this is the rare situation because the likelihood of the result being bullish here and the 18 average basically not failing is higher than the 18 average failing for one leg higher. But if it doesn't, this is the typical failed breakout situation within the statement in that it made, and then you'd have the breakdown. See, this type of information is what you should be getting in like training courses and stuff. It's very good information, I think, and I'm going to continue on while I'm hot, I think. Let's start off with a new code. This is IGNIS, I-N-G-I-N-S, and I'm on the daily time frame. It started off, these things always start off at 1. Basically, so, well, it says open is 768, but I see on Bittrex it looks like they open it at 1, and it's always down 99% when you look at it the first day. So be it. I like these to wait and see how these things settle in. All I can see on the daily is that it is in a declining 18 moving average. So that's nothing too fantastic right now. I don't got much history to determine how much I want to buy on the break. I do realize short term that 2258 was a level of support and it is just barely broken below it. So there would be no way, no how. I look at just quick ways of calculating, and I'm looking for a downtrend going higher for Fibonacci upside. Normally I would use this key low, but it rallied up here and then it came back down, making a higher low before this rally. So I would take, say, this low here, and it says 2,306. I'll put my Fibonacci calculator up. And then we can take a look at the high, which is 3344. What I want to do with this is verify the inside numbers, which is the retracement numbers. And we'll know what the downside target is. Well, the downside target is in at 1833. And they usually pierce extra. Let's take a look at 2658, 2901, shorter term time frame. Well, 2650 I'm going to even go a little shorter than that. Let's do 2 hour. We can see it was the congestion area after it had its move higher. Markets can correct one and or of two ways, price and or time. This was the and, because when you go all the way up from 29 and shoot down towards here, there's your price correction. Then you just do the sideways stuff. That's your time correction. So 2900 was the next area. And quite frankly, I can only look at this on the way down, actually, because you got the point A, point B. So 2,900. You can look it on the way up to see how relevant it is, but it does fall down to 2,900 on its first retracement, and then goes down lower. 2,650 was a little bit of support here, resisted it, and then when it gave in, it hit down pretty hard. Does this level of support? That's what I look for. Was this area showing any resistance? I know the area is 2311, and on here I don't see any. Shorter term time frame. I see a little bit. So 23ish or so I said was the kilo. So here's that area from 6 a.m. to about 9:30 where it just stayed sideways throughout it. This period in here, it had a break below it, making its statement of breaking down below support. And then even the period before, we have a move up close to the 18 average of highs, back up to the 20, that area. So it's had one small area, so it's definitely at the point where you could definitely be in mode of a decent move at any time. I prefer not to put a buy order in this. I want to wait for more market action. So I will not be buying at that 18 handle or anywhere else within it. Looking at Unbreakable Coin, an amazing chart or code for buying low, selling high within the mechanisms that I talk about. I'm looking for a price to go to 61.26. It already told me with this major level of support around the 10,000 handle, roughly the last few days, that she's heading lower. I don't expect the leg lower just to be down here. Now that it's in here, whether it takes a day or a month, I would expect it to come down to this level. If it doesn't, it doesn't. It's going to be a failed move, fast move to the upside because of the a small noticeable break down below. So therefore, key level of support was in at around 9,300. Let's take a look at that shorter term. Okay, this is too short term. Yeah, she's just heading down. Not much of a move in here. Wouldn't surprise me if we do at some point have a decent move up there, but I mean, next decent size short-term resistance is in at 8,500 now. If you want to play for a massively large crash move, what I'm looking for, this is monetary unit. I'm an owner of it, but it could very easily do what I'm going to talk about. We see a chart that's got some decent movements. I mean, what happened here? This is a price action that went from like 100 and change, and then just did all of this stuff up here. I'd be curious to see a Fibonacci downside from a move from this low to this high would represent a move back down to 100. Also, one of the things you want to calculate is Fibonacci from this low to this high. But which high do you choose? I really don't want to choose this one here. I have a multiple hit area in at around 5,400. But it has decent amount of pierces in this. I could take this high at 66. Oh, that's a complicated situation to decide which high you want to use when calculating Fibonacci. But I'm going to use 5,500, and I'm going to use the breakout lows of 19. Key numbers 1444, 631. Okay. Well, 1444 has most certainly been a key number. 631 is just part of the middle of this gap fill. Let's take a look at what Fibonacci downside has. From a low of 1225 and a high of, say, 3700. $619. Give it a shot, baby. But 600, yeah, that might be an area where it's a decent move from this leg. And of course, that's if it happens. Like anything else, all these other charts, until you can see these stages, the 4 stages I talk about, band flattening out, establishing resistance, coming back to the band and breaking, then there's no signs of it turning anytime soon. It's obviously not even close right now. The one thing that does work within these crypto markets, and all markets, you go down, you go up, you go down, you go up. That's so obvious. And the 18 average that will always work within this strategy of practically every kind of market like that. Of course, when markets continuously go straight down or when volatility is weak, then not so much the case. And in these particular markets, markets always go up faster than they go down. So this thing pretty much started its decline on January the 11th, which means that we are now in like what, week 6 of the decline. So if it were to hypothetically bottom now, the projected time it would take to get to 3,300 would be significantly less than 6 weeks, probably closer between 7 to 12 days. Now let's take a look at some winners. Litecoin is a very big winner today. It's up about 50% against Bitcoin. The amount of time that this took to fall from here was January 27th to like, well, now is a matter of a little over 3 weeks. This entire decline from the high of 195, well, this was on January the 7th. So again, like 6 weeks of decline. As far as I talk about, there is no sign here of a bull market on February the 7th as the price is hugging the 18 lows. Oh, but it could go to 51. The word is always could. Market moves. There's stage 1, band flattening out. There's stage 2, resistance established. Okay. When you get to this, I guess you're either going to go to move to stage 3, where it's either going to be come back to support, do its bullish things, and then later break established resistance, or of course come back and you have the failed breakout. But that doesn't mean stage 3 is going to come into play. It sure as heck didn't back on December the 20th. Because here's where you have, okay, stage 1, band flat. Okay. Now we're attempting to establish resistance. Oh, that's decently high. Okay. Yeah, I have to say resistance is established, and then you just get a big move. That can happen at any time like this. So you don't know if it can happen at any given time. Mathematically, it makes more sense for me to see this price at 250 within 7 days today than it would have been yesterday because of what just happened. Just like back in here when the price on December the 14th, when it was 11, it made more sense. It didn't make much sense that the price would get to 50 bucks in the next week. Yet, on this date, right the day before it happened, ooh, I don't know if it was probable that it could make to 50 in a week, but it sure looked better than it did a few days prior, and it just happened to do so. But just because you look at this pattern Okay, we had this down move looking exactly like this. You have an up move, you have another up move that goes up but comes back, and then you have a sideways move, barely bullish. Then you have another bullish candle, barely breaking resistance. Oh, that's bullish, which it is. So we're obviously going to have like a 8x gain or better. Oh yeah, of course. And well, we're talking about a 12x gain. Yes, of course. No. Well, I'm not going to say no, but just based on how these markets move, these things can go at any time. It's more likely to happen after you go through those early stages like the band flattening out than it happens when it's hugging and falling from the 18 average of lows. And I'm going to finish this off by showing my watch list. This is sorted by percentage change. So RDD is at top and BitBean is in a decent second place position as it had a rising 18 average turning. So there's stage 1, stage 2. Does this count as established resistance at 129? To me, it's shady, it's close, it's not quite good of a move. I mean, it still is bullish signs to have what has happened. If this was an established resistance, this most certainly was, and it did come back to the band in this case. But as we see after this, we got Geo is up 22%, and it's only trying to flatten out the band still. That's still all it's done, because it was a mile away from the 18 lows. Managed to get up to the 18 highs, but has retraced back an okay amount. So it's hard to trust those rallies when a situation like this occurs. I really don't want to take a look at too many coins. I want to talk about the psychology when the mass markets do something like this. So now we got the Litecoin doing well, up 11% against the dollar. Litecoin, Ethereum, different market when you look at Ethereum. You got Aurora coin up small, 8%. You got a few up 4 and 3%. The close to break even numbers, and then the close to break evens on the downside. But we look at how many are down. We got 4% down. They're not sorted. I guess they're changing in time. See this here, XCP. Why is it 2.93% above that? That's because when it was sorted, it was in between those numbers. So this tells me that just over the last few minutes, this thing is rallying. Let's see if that's true. Yeah, I guess so. 25.8, 26. That's a decent enough move. So I guess that would count. But the whole point is now you get all of these markets down against Bitcoin. The vast majority of them are down. Bitcoin has been rallying, so a lot of these coins going down are still stabilizing against the dollar. When these coins go, like all of them, they're ready to go, they're going to go. So just keep that in mind. Of course, because there is so many of them, there is going to be your share of ones that fail, and you can most certainly expect to get notifications on several coins on Bittrex where this coin will be delisted. A lot of them will be that way. But when you're playing coins like Litecoin and Monero and Dash, you're not expecting those coins to get delisted. But if you're playing codes like Unbreakable, even though they say they're unbreakable, I would trust owning more of Litecoin than I would UNB. All right then. This was, I think, a very productive, very educational 34 minutes piece of information. Thank you for tuning in. Bye-bye.